Hello traders, welcome to the video. In this video, I'll be showing you a very quick price action strategy that you can use to trade the boom and crash market without any using indicator. This strategy is a very high probability strategy that people have been using for a very long time. I have been using this strategy also for a long time, and I would like to share with you guys today. In this strategy, like I said, there is no indicator required, but I want you to pay attention to some certain things that will be needed for this strategy. So as you can see on my chart, I am on the 30 minutes time frame and I have boom 500 over here. So this strategy you should know is applicable to boom, volatility, jump, or any other markets that you see out there. But it depends on how you practice and you use this strategy that will determine your win rate. And it is very effective. So the two strategies I want you to pay attention to is one, we have the double top and the double bottom. This is one of the pattern I want you to pay attention to. And two, the head and shoulder pattern. This is the left shoulder, right shoulder, and for the uptrend we have it like this. So these two patterns are very effective and you need to pay attention to them. So what are you looking for in this strategy for you to look for this pattern? So first thing you want to wait for is you want to look for areas where market have rejected. That is a particular area where you have seen weak for a long time. You see over here, to take your rectangle tool, you see at this point there is a rejection, so you draw it to the upside because you know market is likely to reject also at this point. So at this point, if market is coming back to that level, you look for this our pattern that we are talking about, which is the double top and double bottom with head and shoulder patterns. So next we go to our 1 minute time frame and look for that area. So if you look carefully over here, this is the first rejection that occurred. If you come to this point, you see that the market generated the head and shoulder pattern. You see, this is the head and shoulder pattern to the upside. So this is the first head. It has not tapped into the zone. This is the second head that is longer than the first head. So you know that the market has created the left shoulder at this point. Once it come down to be slightly below that level, then you enter a buy and take the spike to the upside. You see over here, so this is the first, then this is the second tap, and you see a spike to the top side up to this level. So you guys understand what I am saying. So let's look for more examples so that you will understand more about what I'm discussing over here. So you see over here, you see that there is a rejection at this point. So you only mark out the wick of the candle. You only mark out the wick of the candle. So you see it at this point, then you go to your 1 minute time frame and look for that zone. This is the first wick. So if you wait carefully to this point, you see market also generated a head and shoulder pattern also. So rejection to the downside. So let's say you buy at this point, your stop loss be above. You see a spike to that point, but it did not take you out, and then you leave until it run to the downside. You see it going down until it touches this point. From this point, stop loss here to this point, that is a lot of pips, guys. That is over 8 RR over there that you have. So let's say we go to our 30 minutes time frame. All you just need to see is a rejection. All you need to see is a rejection. You see over here, market reject at this point, reject at this point. So if you take your rectangle tool, then you mark out the first rejection over here, or this second rejection. Let's say you go to your 1 minute time frame. So you see over here also, this is the first rejection which occurs at this point. So if you look carefully also over here, you have the head and shoulder pattern also, or you can also use it as the double top. So you see over here, spike, create two levels of almost the same high, so you can sell at that point. That is a double top. Or you can wait till it generated the right shoulder, which will be at this point, then you sell the market to the downside to take out these lows. So you guys can see this is a double top, and this is a head and shoulder pattern. These three, it is very effective. If you go to your 30 minutes time frame, and the first place I marked, so there is a rejection at this point, you mark it out and you wait patiently until market taps at that point. So this is it. You have this rejection over here, so you wait patiently until market comes. You see, this is a double bottom. So once you see the first spike, you can wait for a little retracement, then enter another position, spike, retracement, spike, retracement, spike, to take out this high. So that is how you trade this strategy. So let me go to the crash market and also show you that it works also. Let's use the crash 300 for example. We go to our 30 minutes time frame, then we look for area where there is rejection. Let's use this area for example. There is a rejection at this point over here, and you go to our 1 minute time frame to look for that point. This is the first rejection, and this is where our focus will be. So we see market creates the left shoulder, comes, create the head, come down and create the right shoulder before it starts selling to the downside. Hope you understand what I am saying. Let me look for one more example to explain this again. So you see over here, this is a rejection point. So if you come over here and take your triangle tool, go to your 1 minute time frame and look for that particular zone, you will see a lot of opportunities. So this is the first rejection. At the second rejection, we see that market did not give a clear pattern. You see, this is the left shoulder, comes down, create the head, comes down, but did not give us the right shoulder to sell. So we will leave this trade since we call this a miss entry. Then, but that area is also still valid. So once the free market comes to that area again, comes, create the head, comes down, create the right shoulder over here, then we enter a sell at this point, and it continues to spike to the downside up to this point. So you guys can see that this strategy is a pure price action strategy, and you do not require any indicator to trade it. So now I want you to go back on your chart, backtest this strategy and forward test it using your demo account, so as to build confidence with the strategy and to know exactly how the market behaves in the live account. So now, if you find this video helpful, don't forget to click the like button, subscribe to this YouTube channel, turn on the notification bell so that you get notified anytime I drop a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.